The U.S. financial industry has an unrivaled record of creating wealth. But while its success has lifted many up, it's also left many out.
The principal driver for these inequities are structural. The most notable is structural racism.
Minorities have found prosperity blocked by restrictive policies and outright violence. Women have been underpaid at every level and excluded from leadership roles.
Women have been disadvantaged, women of color even more so.
People will say, oh, I don't have any people of color. I don't have women because I can't find any. It is not a supply issue. It is not a supply issue. It is not a supply issue.
Business and finance are starting to take action to reduce inequality.
What I want to be able to demonstrate is a high-performing, diverse team can deliver better business outcomes.
But solutions are still elusive.
We have begun to see changes in who gets the money or who gets access.
So there's definite momentum and there is growth as well, but a lot more needs to be done.
The world of capital is in the middle of a culture change. Will it rise to meet the moment?
Join us for Money and Equality, a Bloomberg special report.
Welcome to Money and Equality. I'm Sonali Basak.
And I'm Romaine Bostick. We're going to focus on the U.S. financial industry and how it's responding to racial and gender inequality, a deep-rooted problem in society that's causing detrimental effects across the economy.
Let's start with a look at some of the economic gaps faced by Black Americans and women that have grown even more alarming over time. In the late 1960s, the average white family had 5 times the wealth of an average Black family in the U.S. By 2019, that gap grew 7 to 1. Today, Black Americans hold less than 4% of the $116 trillion in U.S. wealth, with homeownership accounting for a lot of that shortfall.
It goes back to redlining. Banks and government agencies for many years gave out the riskiest ratings to predominantly Black neighborhoods, keeping many families from getting affordable loans for their homes or for their businesses. But despite fair housing laws, racial disparities in home ownership, it's worsened in the last 25 years. At the same time, the gap in home values in white and predominantly non-white neighborhoods has increased. Then there's the gender pay gap. While economic disparities for women have narrowed since the 1970s, the gains have been slow and they remain precarious. During the COVID-19 pandemic, women, particularly women of color, have been hit hard by job losses in services industries. Many women have been pushed out of the workforce entirely. The number of women who want jobs but say that they're not seeking work due to family obligations, that's more than twice as high as comparable statistics for men.
These gaps have an impact on millions of people, and they take a dire toll on the broader economy. Bank of America says that with gender parity, global GDP could increase by $28 trillion by 2025. Unfortunately, at the current rate, it will take more than 250 years to close the economic divide. Meanwhile, in the U.S. alone, Citigroup estimates that the racial wealth gap has cost the country an estimated $16 trillion in lost economic output over the span of 2 decades.
All right, so we know inequality has been deepening for decades, but it was in 2020 that brought a groundswell of protests against racial violence, and then suddenly, these issues were just too impossible to ignore.
That's right. Institutions have finally had to admit the need for change, which is a positive step. But Wall Street veteran Carla Harris reminded us, it's just one step.
I think the issue, or the big impediment, is the how. People obviously understand the what, and the what was around before last year. And in this last year, I think people have really gotten their arms around the why. Why is it important? Why is it an imperative? What difference will it really make for us? But I still think the how is the impediment.
The first response from major banks and money managers, huge funding initiatives aimed at helping close the wealth gaps. JP Morgan put up $30 billion. Bank of America and Citigroup also made billion-dollar pledges.
All right, well, those numbers, they sound impressive, but there are decades of damage to be reversed. Lenan Nguyen, who covers equality in finance for Bloomberg News, she talked about this. And since this flood of commitments came down, she's been asking people in every capacity on Wall Street, executives, investors, employees, whether it's enough.
I have to say my sources don't think it's enough. Many of my sources think it's a good start. Let's have the conversation. Let's keep the momentum going. But still, many of my sources in the industry say this is long overdue. This is just cracking the code just a little bit, but it hasn't led to a wholesale or systemic change.
It definitely is not enough. I mean, there are lots of headlines that I am pleased to see that have come into the marketplace over the last year. But as you and I were talking about last summer, I said, let's have a conversation in the summer of 21, and let's really talk about what has been done.
One obstacle to change is that the financial industry looks almost nothing like the communities it serves. Companies have only recently started to reveal details about diversity in their workforces, and many are still resisting calls from investors for independent audits. Still, the last year has brought about some progress.
When George Floyd was murdered, Mark Mason, the CFO of Citigroup, was the only Black executive on the C-suite of the 6 biggest banks. Now, a year later, there are more than 120 executives on those C-suites, and 9 of them are Black. So there's been a big change at the top.
The biggest changes are being driven by demands from clients and consumers. Investors are starting to hold companies accountable for racial and gender fairness, paying attention to clients they deal with and people they hire.
What I think that you're seeing is not only a resurgent commitment to talking about the moral imperative and the economic opportunity, not just for people in those diverse affected communities, but all communities which are connected, but you're hearing it from different voices, including lead voices in the majority community.
I think for many corporates and individuals, what changed was they said, well, we have to do our part, right? There's an old saying that, Wall Street oftentimes use, which is you don't want to be on the wrong side of that trade.
Generations who are coming into the workforce today are way less tolerant and accepting of it's going to take time. How about now? How about now? And if not, why not?
The current reality is there are still huge gaps in access to capital for minority-owned businesses. The numbers are dismal.
Black women are starting businesses at the fastest rate of any demographic. And yet today, Black women are 24 times less likely to own a business than a single white man.
The reality is people of color are the fastest growing entrepreneurs right now because Black entrepreneurs in particular have not been invested in parity with their white peers. The economy's lost $300 billion and the opportunity for 1.1 million jobs.
We look at just the VC funding that has gone to women-led businesses or minority-led businesses. It is tiny, tiny. So any money that is made available is desperately needed, and it will make a difference. But it's a question of keeping the momentum going as well.
How do you keep that momentum going? How about getting more diversity into the rooms where decisions are made?
That's what we'll talk about next as money inequality continues.
This is Bloomberg.
Welcome back to Money and Equality. I'm Sonali Basak.
And I'm Romaine Bostick. The complexion of Wall Street, it looks nothing like most of America. Clients, investors, regulators starting to take notice, and that's pushing banks and financial companies to take action.
People are more conscious about what does our workforce look like? What do our leadership ranks look like? And is there an opportunity to promote and move in more women and people of color?
It's not just about filling the seats with the numbers. It's about really seeing people professionally move through the organization. And what that's going to take is consistent, intentional focus.
The numbers out there show there's a lot of work to be done. At the major banks that have publicly released their equal employment opportunity filings, a tiny percentage of top officials and senior managers are Black men and Black women. For many banks, it's the first time this data has even been revealed at all. Although Bloomberg reporter Linan Nguyen points out, the industry is becoming more open about diversity.
I think there's been an acknowledgement that the numbers are low, that the number of Black executives in particular, and other people of color, but the focus has been on Black Americans in the last year, is very low. And so I think a lot of them have decided, okay, well, let's just rip the Band-Aid off, and here's our starting point. It's low, and we want to do better.
So how do these companies do better? Many of those we spoke to agree that diversity in leadership is critical.
It is so important if we're going to really advance equity and equitable outcomes that we have leadership in terms of the executive suite and the boards and those that are in governance and have the chief influence in the organizations that represent the society that we live in.
I mean, I've changed over my leadership team since I've been here, and the leadership team leading home lending at Wells Fargo is 58% diverse, and we are performing exceptionally well. And so I think busting the misnomers about high potential performing diverse teams can drive great outcomes.
For us, a key thing has been having senior female leaders in very visible roles. Over half of our assets under management are managed by women. That tells women in the pipeline that there is a pathway from entry level to senior leadership.
The gender pay gap is just one example of how the pathway to success is steeper for women. While more women are finding work in finance, the representation in senior leadership at the major banks is still lagging. Kate Luzio worked on Wall Street for years before founding the women's network Luminary. She says money is only part of the problem.
It's not just compensation, it's opportunities for development. It's companies taking risks earlier on in women. And more importantly, it's showing them that there is a career path, charting that career path out for them, and making sure there are policies that support them regardless of their choices around becoming a parent, flexibility, moving roles. You just don't see that as much in Wall Street.
How come there hasn't been, from your own experience, more advancement over the last couple of decades?
I was invested in, I was developed, I had great mentors, but at the end of the day, I was poached and recruited. Rather than those companies looking within their own company and saying, who can we develop earlier? Who can we take a risk on? Who can we put in this job and really invest in their skills, even if they're not ready yet, because that's the biggest excuse. We're just gonna go find someone else that can do it.
Banks are also looking more critically at how they set up the talent pipeline to get more diversity at the entry level. Carla Harris says it's about time.
So often in financial services, whether it's in fixed income or equity or investment banking, we have thought narrowly as an industry that someone has to have not only strong analytical and quantitative skills, but they need to come from this school and they need to have had this exposure. But far too long, financial services have looked for people in specific verticals. Well, my colleague said, well, wait a minute, if we need a great salesperson, you can find great salespeople in pharma. You can find great salespeople in technology. You can find great salespeople in operations. So let's broaden what we're looking for and look for those key success factors. We can teach the financial piece.
When we talk about the ability of finance to create change, we also have to look beyond the banks. Asset managers and private equity firms play a huge role in deciding where the money goes. Take the Carlyle Group. It employs almost 1 million people across all of its portfolio companies. It's one of the only big buyout firms to have a non-white CEO, and its executives are thinking about diversity at every level.
Look, it's clearly the right thing to do, but it's also a really smart thing to do for our business. We looked at our own data. We looked at the boards of our portfolio companies. And over a 3-year period, what we found was that those companies that have a diverse board saw average annual earnings growth that are 12% higher than those companies without a diverse board. So this is clearly a value creation. This is a way to add value and make those companies more successful. And we're in the business of doing that.
Romaine Carlisle has set a goal to have 30% diverse directors on the board of all of its companies within 2 years. Many of its rivals are moving in a similar direction.
And we know that board diversity, it's an important benchmark for progress. But when you look at private equity as a whole, you have Apollo estimating that there are only 100 black executives out there in an industry that manages a collective $4 trillion.
Bottom line, there's a big push for change right now, but results will take time. We want to give the last word here to Wells Fargo's Christy Furco, the only black woman to lead a national mortgage business of a major bank at that scale. She gave us an encouraging view from the front lines.
I'll just tell a great story. One of my direct reports had a job open, and the job had been open for 3 weeks, and he comes and shares with me that the lead candidate is a white male. And I said, it's been 3 weeks. You haven't tried hard enough. I want you to go find a diverse candidate. And the search took 4 additional weeks, but he came back and he made the offer to a Hispanic female. And he said to me, I have to thank you. I would have hired the white male. And he said, as a result, I have a more qualified, better candidate, and she happens to be diverse. And that's the opportunity with diversity, is don't go for the easy fix, right? That's what's in front of you, but work harder to find the best talent.
Coming up next, getting capital to communities that the financial system hasn't always seen.
And how policymakers can make this process smoother.
This is Bloomberg.
Welcome back to Money and Equality. I'm Romaine Bostick.
And I'm Sonali Basak. Financial firms are recognizing the need to build equality into their business model. But Bloomberg reporter Lenan Nguyen notes that there are structural inequalities that determine who gets heard on Wall Street and who doesn't.
People have sought out help from HR and been rebuffed, right? There are some very egregious instances of people, suffering from racist incidents, and then having them go nowhere, and having the people who perpetrated the racism stay in the firm because they're producers or because, HR kind of sided with somebody else. It's an experience I see time and again. People of color or marginalized people aren't heard. And, it speaks to a broader structural issue that, the people who are in the out group, just aren't heard and continue to sort of face these barriers.
The same questions of empowerment are dominating the economic discussion in Washington. The Fed, under Jerome Powell, making racial and gender disparities part of the conversation on monetary policy. And you have President Joe Biden making equality a priority for his administration. Cecilia Rouse is the first black woman to lead the Council of Economic Advisors.
Here at the Council of Economic Advisors, for example, we are really doing a careful look at federal statistics and to ensure that there are adequate samples of people for different groups so that we can measure and be keeping track of, for example, the unemployment rate by subgroups.
When we're talking about inequities, right, that's not solved by better monetary policy, right? That's solved by fair and equitable, not only employment practices, but promotion practices and provision of opportunities.
Well, I think one of the things that the federal government can do and President Biden will be able to do is to use the bully pulpit to push hard for the federal government to do business with minority-owned companies in everything we do.
Harold Butler oversees banking services with the U.S. government for Citigroup's investment bank. He also helps manage the bank's work with minority-owned financial institutions, whose numbers have dwindled in the last decade.
Up until recently, there's never been a black financial institution that has assets over $1 billion. Now, basic statistics will tell you that in order to make a meaningful change in communities, right, to be able to be empowered to support communities, you got to have assets over $1 billion. The work that we started with the Treasury Department was about creating opportunities for minority deposit institutions to do business with Treasury. Industrial Bank is the bank that's actually doing business with the government today. Is historical. They're the first and they're only black financial institution to actually do business with the Department of Treasury. That's fundamental. That's game changing, right? Because it creates a new line of revenue, but it steps up really to focus on some of these banks, and it gives them an opportunity to participate in things well beyond retail banking, for example, and making small loans.
As the racial wealth gap widens, disparities in home ownership continue to hobble minority communities. But in 2020, Wells Fargo made Christy Furco the first Black woman to lead its home lending division. She's made it clear that she aims to put more Black people in homes, and she understands the challenges of doing so.
I mean, there's an issue around being able to save for the down payment. So down payment assistance is really important. FICO scores, continue to be lower for Black Americans than they do for the general population. And so working on access to credit in that way, and then affordable housing supply. If people can save the down payment and get ready, there aren't the availability of housing. And with the limited housing supply market that we've seen, it's more and more difficult for that affordable housing supply to move forward. So those are the barriers that we consistently see.
Melissa Bradley is a serial entrepreneur who has also launched business development programs. She says the pandemic may actually accelerate the growth of minority businesses, creating more entrepreneurs ready to put investments to work.
While we say that entrepreneurship at large has somewhat been on a decline, I would say amongst communities of color, it's been one of the fastest growing aspects of their life. And probably for one, because it's an opportunity to oftentimes fill that gap where their paychecks don't meet all of their bills.
How do you create a system here where you can ensure that those folks who have good ideas can actually connect with the people who have the money, who think they are good ideas?
There's been a plethora and increase in crowdfunding and the kind of democratization of people having access. Certainly, CDFIs have now been better funded and have received a lot of money and resources to particularly put towards Black and brown businesses. And obviously, again, unfortunately, because of George Floyd, you now have lots of corporations who have made commitments to be able to help Black entrepreneurship thrive. And so you're beginning to see more grant programs. You're beginning to see more alternative types of capital.
Many also think the Fed can do a lot more. Katerina Saraiva covers the economy for Bloomberg News.
We know the main regulatory entity for banking when it comes to lending to minorities is the Community Reinvestment Act. And that isn't really a powerful tool. There's an overhaul right now going on of the CRA. It's still kind of being debated right now, so we don't know what that's going to look like. So that'll really be interesting to see if they do give it more power.
How does that tone from Washington run into, influence changes on Wall Street and corporate America?
Oh, well, I think it's extraordinarily helpful when you get that kind of message from the top. But let's make no mistake, the person at the top can have a lot of focus, can be loud about it, but there needs to be that measure of accountability in the middle. By the time the narrative gets up to the CEO, the narrative has been changed. So you need to make sure that there's a measure of accountability in the middle if you want it to be successful.
That wraps up our special report on money and equality. But Bloomberg's coverage of equality, it doesn't stop here.
For more news, opinion, and analysis focusing on equality around the world, visit Bloomberg.com/equality. Bloomberg Terminal clients can use the function EQLY Go.
And we want to hear from you. You can reach out to the Equality team on Twitter at BBG Equality and on Instagram at Bloomberg Equality.
Thanks to everyone who spoke to us for this program.
And thank you for watching. I'm Romaine Bostick.
And I'm Sonali Basak. This is Bloomberg.